Mark Matthews of Bank Julius Baer & Co. is now joining us on the show. Mark, thank you very much for joining in. You take us through the setup as you see it right now, and where are we headed?
Well, one thing that you haven't talked about is the earnings season in the United States. And this is the big week where the bulk of the earnings will be coming out this week, including the big technology companies. But what we can say based on I think about 140 companies that have reported so far is the beats are exceeding both the beats last quarter and the 10-year average. So the beat rate for the companies that have reported so far is 83%, and the blended earnings for the S&P, in other words, actuals for the companies that have reported already, and then forecasts for the ones that haven't, is 9.2%. Now, when we began the reporting season, the consensus was looking for 7.8%. So I think, one good thing that you didn't managed to talk about yet, but is the earnings, and ultimately those are the most important thing for the stock market. The guidance seems to be quite optimistic too.
Does that mean the U.S. markets continue to move higher and higher? And plus, there is a potential Fed rate cut that's lined up this week. I mean, what's the outlook now from here on after this kind of a rally?
Barring black swans, and we had a potential black swan, it's still kind of lurking, which is the private debt market. And there was another bankruptcy in the auto lending space last week. Barring black swans, I don't think the auto loans are actually systemic. I suspect it has more to do with the repatriation of illegal immigrants. Then, yeah, the trajectory is that we will go higher into the end of the year. One reason for that is that this has been a retail-led rally. The institutions were skeptics, and they are looking embarrassingly underweight stocks. So I think that there will be a temptation on the part of many a fund manager to at least neutralize their positions relative to benchmarks, so they don't look like like they're big pessimists in a bull market. And then I might actually point out an interesting technical setup, which is the Nasdaq 100 clearly is the big technology companies and innovative companies. Unless it declines 2.3% this week, it will have a up month, and that'll be the 7th consecutive up month in a row. Now, looking back in the history of that index, there were only 4 other times that the Nasdaq 100 had 7 consecutive up months. And if you look at what it did in the 12 months that followed those up months, there were double-digit returns in all of them, and the average was 17.5%.
All right. Hi, Mark. Good morning. Good to see you. And as always, what about these expectations of the India-US trade deal? We thought our turn was coming. It seems it's coming, but may not be as soon. How are you reading the commentary and the comments that have come through on this front? And what's your view on the Indian markets? What do you like out here?
Well, I thought that the Financial Times made an interesting observation last week when they pointed out the regions and countries that have basically agreed to Trump's terms are the ones that rely on U.S. military protection, like Japan, South Korea, and the European Union. The Chinese certainly do not rely on U.S. military protection, kind of the opposite, actually. And we have seen clearly in Chinese exports that the U.S. It matters, but not nearly as much as it used to, because globally, exports from China to the entire world are up over 8% in September to a new record amount this year in dollar terms, even though exports to the United States are down 27%. And as a percent of global imports, the United States is only 15% of global imports. So I think what we're seeing is that the exports to the United States, which would have been, of course, very important for many economies back in the 90s, back in the 2000s, even in the 2010s, are not anymore nearly as much. And therefore, I think we're seeing, in China and other places, these deals coming through. Now, the thing is that President Trump makes it up as he goes along. So, he just slapped another 10% on Canada because he didn't like what a premier of a province there did. So we don't know what he'll do with India. But I would say, broadly, the trajectory is positive. And the Indian market, as we know, has been a laggard in global terms this year. It wouldn't have been if there hadn't been this huge amount of foreign selling that we've seen so far this year, which I believe is basically just a reallocation into China. So I suppose the only bad news for India is that the better China does, the more it takes attention away from India.
Absolutely, Mark. And I was just coming to that because if we add it all up, at the end of the day, a global fund manager has many markets to go to. And it seems that the U.S. has thrashed out a deal with the Chinese. So, the rare earth issue, at least for now, has been sorted out. In that context, do you see any reallocation towards India? Because we still don't have clarity and specifics on our trade agreement with the U.S. The only other thing that we can kind of call out is the fact that earnings here have been looking good. Second quarter numbers are so far so good. People do expect a better second half. So how would you look at India in the global context?
I look at it favorably because I do believe the earnings will be higher than what the consensus forecasts. The consensus was too bullish last year. And so therefore this year it's playing it safe. But I think all of the cuts in taxes and fiscal stimulus in other parts that we've seen, and of course the cuts in interest rates will translate into a higher earnings growth than is the current consensus forecast. So I'm fine with it, but I don't think it's on many people's radar screens right now. They're probably trying to catch up on China because for 5 years, basically, global fund managers just forgot about China. They didn't look at it. And then all of a sudden this year, it's come out of nowhere to surprise them. They have a lot of homework to do, a lot of catching up to do. And I think that eats up their time, gives them less time to look at other emerging markets.
Thank you very much, Mark. Always great chatting with you and throwing in the perspective about the U.S. earnings too. So far this year, the Nifty is up about 9%, while the Chinese market, Shanghai, is up close to about 20%. Let's tell